Moving back to Nigeria, the equities market closed trading on Friday on a negative note, and at the ending of the trading session, as the NSE All-Share Index depreciated by 0.11% to close at 34,301.37 points, compared with the depreciation of 0.61% recorded on Thursday. Well, the fall in the index on Friday is as a result of the loss recorded in the shares of some highly capitalized stocks such as GT Bank, ETI, Zenith, Ashaka Cement and FBN Holdings. Well, the top gainers were Okomu, Total Nigeria, Lafarge, WAPCO, Nestle, Dangote Cement, gaining 31%, 6.84% and 13.93% respectively. While the top losers were MRS Oil, Julius Berger, Nigerian Breweries, NACO and PZ Cousins, losing 9.9%, 3.5%, 1.04%, 18.42% and 1.93% respectively. Meanwhile, week on week, the All-Share Index stood at a positive 2.28%. So, well, you could say it wasn't all bad news. Well, the year-to-date return currently stands at 22.16%. Well, now for a look at markets performance in Nigeria from last week and going into the new week. I'm joined in the studio by Jimi Ogbobine, the head of research at Consolidated Discounts. Well, thank you so much for joining me today, Jimmy.
You're welcome. Thank you. Well,
let's take a look at the market. Now, besides the fact that it was a 4-day trading last week, with a turnover of about 1.6 billion shares, transacted in 26,000 deals, with the All-Share Index also up 2.28% week on week. What would you make of the market's performance last week?
Well, market performance last week was mainly driven by what I'll call announcement effect and rebalancing of portfolios. So some companies like Zenith, GTB, they've released their results. Investors who've already bought in a long time ago have started booking profits. Some are just entering because they are dividend hunters, and some are moving into stocks where they believe that they can actually position well ahead of results, like Total. So you just see rebalancing of portfolios, you see announcements triggering investors' reactions, and you see dividend hunters also trying to realign their positions across board. But Friday, I just feel Friday was usually the usual lethargic Friday effect, people trying to sell down to position their books for the week. But overall this week, I'm sure we'll see better trading.
Oh, so you believe that this week has better things in store?
Yeah, the week has better things in store.
What makes you say this?
We're expecting more results. We're also looking at international investors. There's the Global X Fund that's added 28 Nigerian listings to its global index, which will be traded on the New York Stock Exchange. The usual Nigerian suspects are there: First Bank, Nestle, Dangote Cement, Access Bank, the big Nigerian listings. Then they also looked at non-listings in Nigeria. Companies which trade in Nigeria get the bulk of their revenues in Nigeria, but are not listed in the Nigerian Stock Exchange, like Saipem, like energy, some energy companies. That's why you see the index, 41% of it is mainly financial services, while 24% of it is mainly energy companies. And the only energy company they're listed on the Nigerian Stock Exchange is Oando. So that's going to still trigger the foreign investment, foreign interest in Nigerian stocks. Unfortunately, what that also does is that it brings Nigeria more in line with international shocks. So if there's an international shock, then it gets more amplified here in Nigeria. At the same time, if Nigeria's macroeconomic risk also gets embellished, like MENT does anything wholly to the energy companies, then it could also affect the listings, the positions of those listings in the New York Stock Exchange.
All right, now you just mentioned something very key. You talked about factors that might affect a positive outlook on the market this week. You mentioned release of results. Now, last week we saw the banks release earnings reports. We saw that from GT Bank, Zenith, Sterling, and yes, Access Bank. Well, while many say you could call it more of like a mixed performance, across board, let's just focus more on Access Bank's results. The bank has reported a 49% drop in profit after tax, for the first quarter of 2013. What do you make of this?
It's a rather puzzling result from Access Bank. Apart from the drop in profit after tax, they also reported a 20% drop in interest income, they reported a 13% rise in interest expense at a time when interest rate environment, you see loan books, banks are still giving out very high interest rates and actually charging very little for deposits. So it's actually puzzling to see the bank report a 20% drop in interest income and a 13% rise in interest expense, despite the fact that they grew loan book albeit marginally and they also grew deposit base. So you really wonder why they're actually charging less, or why they earn less on a bigger loan book and they're charging more on a marginally thinner deposit base, and which also affected gross earnings by 1%. So it's a rather puzzling result. You expect more explanations from management to actually explain why that happened in the Q1, and you just hope that's not a trend for other banks in Q1 this year.
All right, now that's just the financial subsector. We're still on that case. Let's look at linkage insurance. Now, the insurance subsector, we just saw its Q3 for 2012, profit after tax up by 101%. Now, many have actually said we see reports coming from the insurance subsector coming pretty late. Do you agree? Yes,
I quite agree. I'm not too excited at whatever figures linkage report in terms of high profitability growth. For me, what bothers me is that at a time when even tier 1 corporates, real sector companies, all the banks are reporting full year, linkage is still reporting Q3, and they're probably ahead of their peers who've not reported Q3 or even reported full year financial results. So that actually, as an investor, that actually it makes me nervous, it makes me cautious about them. And for the Q4, remember that most of the insurance companies will have to release IFRS based, and usually the insurance sector is always the laggard in terms of releasing reports. The regulator, NICOM, comes out every time, it makes tough pronouncements, but you just see the same thing happen year in, year out. So really, it's still a sector I'm still very nervous about. The top 2 picks, for instance, in that sector will still remain Mansard and Custodian. And if I had to pick anyone outside, I would probably be Leadway, which is only open to big institutional investors.
Well, before we go, let's just in a nutshell, let's take a look at the global X funds you did mention earlier on. Well, we do know for Nigeria, it provides exposure to the largest and most liquid companies in Nigeria. We know it increases liquidity on the Nigerian stock exchange and gives foreign investors co-efficient way to access the Nigerian capital market. What else does it have in store for us?
Well, what it's going to do now is that because these are big institutional investors coming into our market, you may see some more activist investors, you may see some foreign institutional investors who will be asking our local companies more questions. So for us, it's going to increase disclosure levels because now you now have the eyes of the world on you, not just coming to the Nigerian Stock Exchange, but you're also now being traded in New York indirectly. So disclosure requirements will be higher. Management response time will have to also be faster because international markets, you find that things move faster, and once there's a vacuum in news, investors could just start dumping an arbitrage, which you won't want.